What's up, guys? Alvaro here, and welcome to the bilingual stock market channel again. Let's go ahead and talk about some stocks and about the shoppiness that we saw today in the markets. And today we had the second green day of the week. That's absolutely unbelievable because throughout the last weeks we were having only one green day a week, and this has been the second green day so far throughout this week. So this is something absolutely extraordinary. So the Russell 2000 went up today 1.95%. The Nasdaq goes up 1.51%. Dow goes up 0.60%, and the S&P 500 went up almost 1%, 0.95%. Crude oil goes up 0.95% and closes the trading session at $110.81. Gold goes down 0.70%. Silver goes down as well 0.31%, and the 10-year Treasury yield went down today 0.40%. This is obviously good news for the bulls. And today we had the Fed minutes, which is a summary of what was said and agreed during the last Federal Open Market Committee. And the document that was released was very hawkish. It had a very hawkish tone. So the Fed, for the most part, confirmed that the next two interest rate hikes will be at 50 basis points in June and July. And for the first time ever, the Fed let us know that they want to go neutral. So they want to raise the Fed fund rates up to something like 2.30%, 2.50%. Let's just put it that way. That implies that the Federal Reserve wants to match the Fed fund rates with the 2-year Treasury yield in order, obviously, to control inflation. If inflation keeps on going higher, then they might go even above neutral, okay, or above the 2-year Treasury yield. So that kind of provided to the markets some sort of certainty in regard to what the Fed is going to do throughout this year, because that implies if the Fed actually happens to go neutral or above, let's say that if the Fed happens to go neutral, if they match the 2-year Treasury yield, that implies that we are going to see 4 more interest rate hikes for the remaining of the year, and that kind of provides some certainty to the market. So that might be good news if we want to see things glass half full, obviously. The Fed also said that they are expecting a solid GDP growth in Q2 of this year. So the Fed, for the most part, ruled out the possibility of seeing a recession, at least in the short term, when it comes to the second quarter of this year. They didn't say anything about a future recession. You guys know that the Fed hasn't guaranteed a soft landing, but at least they are very confident that the economy is still going to be growing in Q2 of this year. And the document also highlighted the fact that the Fed will keep a restrictive monetary policy from now and on. So this document didn't sound dovish at all by any stretch of the imagination. And if we want to see things as a fool, we can make the case that maybe the markets might feel a bit more confident when it comes to the path that the Fed has ahead of itself when it comes to hiking rates, because we are very likely to see 3 or 4 more hikes throughout this year. Keep in mind, guys, that the markets are going to be closed on Monday in observance of Memorial Day. So be mindful of that. If you want to, start any swing trade or something like that, you have to be aware that we are going to have a 3-day weekend this week. So as I just said, be mindful of that. If we take a look at the sectors of the markets, what happened today? The worst sector yesterday was communication services. It went up today 1.34%. And the other sector that got the very hit yesterday was consumer discretionary, Amazon, Tesla, Target. And this was the best performing sector today, goes up 2.82%. And the sectors that led the markets yesterday were the ones that went down today the most. So today the most or the worst performing sector was utilities, goes down 0.07%, followed by healthcare, which goes down 0.03%, and consumer staples goes up only a little, just a bit, 0.03%. So the most defensive sectors of the markets were the ones that went down today. When it comes to the most important sectors of the markets, technology goes up 1.17%. We are still seeing a lot of weakness when it comes to Alphabet. If the markets want to go higher, and when it comes, we have been seeing a lot of weakness on Alphabet and Apple. Those are very heavy stocks, market cap wise. So if we want to see the continuation of the rally that we saw today, we need the participation of both Google and Apple. And the financial sector went up today 0.80%. If we take a look at the advances and declines distribution, we can confirm that we had a very broad rally today with 5,057 stocks going up and 2,451 stocks going down today. I didn't have a good day, guys, when it comes to trading. This is a post of my patron. I got Tesla puts, only one contract, and I got absolutely killed. I ended up assuming a loss of $335. Life of a trader, guys. It happens. I am very likely to have a better day tomorrow, in my opinion. I have a lot of confidence in myself, so it is what it is. Business as usual. It happens. Okay, S&P 500 goes up today 0.95% and closes today's trading session at 3,978 points. So obviously, the big question, the $1 million question, was today a bull trap? It could be a bull trap, guys. We are still on a clear downtrend. You guys can see this downtrending channel. The S&P 500 hasn't been able to burst above the upper line of this downtrending channel. So obviously the sellers are in absolute control of this index. The SMAs, 200-day moving average, 100-day moving average, 180 SMA and 50 SMA are declining, which puts a lot of downwards pressure over this index. The S&P is obviously trading below all the moving averages. RSI at 49 points. So obviously we could go lower, no doubt about it. So for a sustainable relief rally in order to occur, and this is something that I told you guys in the video that we posted last Monday, we need to see the S&P 500 taking on this 50 SMA on the 4-hour chart at 4,060 points, which also happens to be a previous support back from early May. So until and unless, according to my opinion, to my humble opinion, the bulls take on 4,060 points, this, the rally that we saw today, or maybe another rally that we could potentially be seeing tomorrow, even though I doubt it because Nvidia is going down after hours, could be classified as a bull trap. So watch out for that. If the bulls happen to take on 4,060 points, then my mindset is going to change. I actually own SPY puts. I would be closing that hedge position, and I might be starting some longs if the bulls take on 4,060 points. Now let's go ahead and take a look at the NDX. There is not really much to say when it comes to the NDX. This index goes up today 1.48%. And keep in mind, guys, remember, during the last 2 Fed minutes, when those minutes were posted, we saw a rally, a rally into the closing bell because the Fed minutes are posted at 2 p.m. Eastern Standard Time. And the next day, we saw massive drops in the indices. So keep that in mind. Maybe tomorrow we are going to see, the same old situation. We go higher on the Fed minutes because the markets, get a bit enthusiastic about the Federal Reserve and stuff like that. Traders take advantage of that situation, and the next day we drop a lot. So keep that in mind. Okay, in the case of the NDX, we can no longer use the 4-hour chart in order to analyze this index. Unfortunately, absolutely killed. RSI, however, we can take a look at the RSI on the 4-hour chart. It is at 46 points. The Nasdaq 100 is neither oversold nor overbought. That implies that anything that could happen over here, the NDX could go either way. But if we pull up the 3-year chart, take a look at this. The bulls scored today a shift. let's just put it that way today, a humble victory. And why? Well, because they were able to close the trading session above 11,800 points. This is a previous support back from November of 2020 and also a previous resistance back from October of that year, 2020. So 11,800 points is going to be absolutely critical, guys. If this support happens to be broken to the downside, we have a massive gap to the downside down to the 180 SMA at 11,000 points. Yes, guys. 11,000 points is absolutely in the cards in the case of the NDX. 11,000 points coincides, or this is a previous support back from October of 2020 that coincides with the 180 SMA on the 4-hour chart. So this might be the most immediate task that the bears of the NDX would have to carry out in the upcoming trading sessions. When it comes to the bulls, the most immediate task for them is going to be reconquering 12,200 points. This is a previous support back from March of last year and also a previous resistance back from October of 2020. So both indices, guys, in summary, both indices look pretty ugly. And the bears are still in control. Sellers are in absolute control of these indices. And as I just told you, since the most immediate task of the bulls over here in the NDX is going to be taking on 12,200 points, if they happen to do so, at the same time, they are going to be bursting above the 50 SMA on the 4-hour chart. And that might be a sign of a potential trend change, at least in the short term, because obviously these two indices look extremely horrible. Nvidia was dropping like a rock, guys, before I started filming this video, and it is still falling like a rock. Let me take a look at the 1-day, 1-minute chart and take a look at this mess, guys, with my VWAPs and my moving averages. My chart looks pretty messy, right? So Nvidia is trading after hours at $157. So it is down 7%. So what happened over here? Let me see if I have the information handy. So Nvidia adjusted EPS came in. There was a correction over here. Take a look at this, guys. So adjusted EPS came in at $1.36, beating the estimate of $1.26 and 29 cents. So they did beat on EPS, guys. Because when I first took a look at EPS, it was looking like a miss, but they didn't miss on EPS, so they actually beat on EPS, right? And sales came in at $8.29 billion, beating the estimate of $8.12 billion. So now there was a correction, guys. Nvidia actually beat on EPS and sales. And what happened with guidance? Let me see. Well, this is surprising, guys. I didn't know that we got a correction on the report. And let's see if I have guidance over here. Nvidia says board on May 23rd increased and extended buyback program to repurchase additional common stock up to a total of $15 billion. So they are buying back shares. Okay, Nvidia sees Q2 revenue of $8.10 billion plus or minus 2%, includes $500 million related to Russia war and China COVID lockdowns. But this is something something very short-term oriented versus analyst consensus of $8.44 billion. So guidance is a bit weak because they are guiding at $8.10 billion versus $8.44 billion. So guidance is a bit weak, but they did beat on EPS and revenue. And I have, Q1 data center revenue at $3.75 billion versus consensus of $3.6 billion. So they beat on data center revenue, and gaming revenue came in at $3.62 billion versus $3.54 billion estimate. So this was a decent report, but guidance is a bit weak on when it comes to the second quarter of this year. So what could be happening over here with Nvidia in tomorrow's trading session? We need to pull up the 3-year chart. What a beating for Nvidia, guys. The stock of this company is trading as of now. Let's see. So Nvidia is at 156 bucks. Nvidia is 55% of the highs. And Actually, the area of support that Nvidia is holding as of now is an important support, guys. $155. If I draw a line over here, $155 is a previous resistance back from February of last year. This was actually pre-split. So, and Nvidia as of now has, for the most part, given up all the gains that it got after the stock split was carried out. That's truly unbelievable. So, if Nvidia happens to pull back tomorrow, watch out for $150, guys. This is an area in which the stock of this company might find some support. And if it happens to bounce back up, we have a gap up to $178. This is a previous support back from July of 2020, of 2021, back from July of last year. So let's see what happens, guys. It wasn't a horrible report. And I am going to be keeping a close watch on the stock of this company near $150 in order to take a bounce back up play. And now let's go ahead and take a look at another stock that got killed today, guys, Snowflake. But in the case of Snowflake, this is a whole different story. Let me pull up here the 1 day, 1 minute chart. And Snowflake deserved the Elmo with the fire, the atomic bomb, the end of the world. Snowflake is 14% down after hours. Let's see what they did. So let me see. Okay, EPS came in at a loss of 53 cents. May not compare to a gain of 1 cent a year ago. Sales came in at $422.33 million, beating the estimate of $412.76 million. And mind you, guys, for the most part, this is a growth stock. So they are still growing a lot because they really crushed the estimate when it comes to sales. But we would have to take a look at the press conference in order to see why we saw such a big miss when it comes to EPS. Do we have, okay, I have guidance over here. So Snowflake is full year 2023 revenue from $1.88 billion up to $1.9 billion versus $2.03 billion estimate. So guidance is a bit weak when it comes to revenue. Let me pull up here the 4-hour chart, and I'm thinking, because I know that Berkshire Hathaway has a small position on Snowflake, I don't really know as of now if the stock of this company has a big institutional participation, but this is an all-time low for Snowflake. So this chart is absolutely broken from a technical standpoint. How low can Snowflake go? We don't know. I don't know. This is anyone's guess. $115, $110, who knows? However, the stock of this company has a lot of, I think that the stock of this company has a lot of institutional participation. And what's the rule? Or what's the rule when any stock that has an important institutional participation happens to drop a lot after earnings or after any specific news came out? We need to let the stock settle. We need to let the dust settles before starting any position. So I am not going to touch Snowflake at all. I need to let the stock of this company settles. And maybe if the bulls can take on, or maybe, mind you guys, the stock of this company is severely oversold as of now, RSI at 27 points. If tomorrow we happen to see some sort of relief rally, on a severe oversold condition, watch out for $124, which happens to be a previous support back from early May, because if this support happens to be taken on, a previous support that now is going to act as a new resistance, maybe the bulls can fill the next gap up to $140, 50 SMA on the 4-hour chart. This would be something like a 10% profit trade, but I am not touching Snowflake in at least 2 or 3 trading sessions. And with a Snowflake, I am going to wrap up this video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays through Thursdays, 3 or 4 hours after the market closes. By the way, guys, I won't be able to film my video with Mario tomorrow. You guys know that I am filming with my friend Mario, the Bull and Bear Talk, on Tuesdays and Thursdays, but tomorrow I have something to do, so I won't be able to post any videos. So I am going to be back with you guys next Monday. So remember, hit the subscribe button and hit the like button as well, or subscribe to the channel and hit the like button. And remember that this is the bilingual stock market channel, the YouTube channel, in which we talk about the markets, but we do things differently because we talk about the markets in two different languages, English and Spanish. So you can pick your preferred language, but most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys once again next Monday, 3 or 4 hours after the market closes. Peace out. Bye, guys.